Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Saurabh Shah. He is a PropTech entrepreneur with extensive experience in real estate investments, asset management, and business development across the United States and South Asia. Currently, he is working at the intersection of real estate and technology to disrupt the traditional real estate financing model with his company, InstaLend, which he co-founded. So thank you so much for coming on the show today.
Thanks, Charles. Good to be here.
So it's a little different from other people that we have, guests that we have that come on the show, in the sense that you are really working with investors and you're also a tech investor. But can you give us a little background of a little bit about your personal and professional background before launching InstaLend with your partner?
Sure. So personally, I'm originally from India in Mumbai. I came to the US in 2008 to pursue my master's in financial engineering at NYU. That was a 2-year program. I wanted to kind of move out from engineering into finance, and I was looking for a good mix of the two worlds. So the program was right up my alley. And New York City is where I always aspired to be, given Wall Street is at New York, and my affinity to be working with numbers and lending and finance. So that's it. Where I'm from originally, that's how I got started in the US. Once I finished my program, I started working in investment banking. That was my first job out of school. So that was a great experience. I did the hours, I did the grunt work. I learned everything as to, what bankers do, what is burning the midnight oil, putting together decks, models. And that's where my love for numbers grew. And I did that for about 8 years, then spent some time in private equity, where I focused exclusively on real estate investments in South Asia, and understood more on the lending aspect, working with creditors, understanding how real estate as an asset class works. And then finally, in 2019, my business partner, who also is my brother, we decided to start InstaLend. And, to be completely honest, the inception of InstaLend was really putting together a source of capital, which had more of a common sense underwriting approach and was put together more from solving the problems that we encountered. And what I mean by that is, while I was doing banking and private equity, we were investing in real estate in the US. So we were buying fixer-up properties. We were doing it out of state. We were doing it in states like Illinois, Michigan, Georgia, Ohio. And we really understood the challenges that comes, for an investor when they have to go and get financing. Either, the LTVs are too low, or it's too slow to close on because you're working with conventional. It's a full doc with income qualification, or your interest rates are super high with a local hard money lender. So we married our experience of investing in real estate and Wall Street, where we spent a couple years working together, and we decided to start InstaLend, which was catered to individual investors like you and I, who were interested in investing in residential real estate within the US.
So can you explain a little bit about some of the lending products that InstaLend does offer to its clients?
Sure. So we're a full service shop. But what I mean by that is we offer financing across the short-term products, which is typically up to 12 months. And we also do lend on the long-term 30-year mortgages. And the way the products break up between the two is for 12 months, we have a product known as fix and flip, which is for investors who want to buy fixer-up properties. We'll give them up to 90% financing on purchase, cover 100% of their rehab. And then once the property is fixed up, they either sell it or they become landlords by bringing in tenants. The second short-term product we offer up to 12 to 18 months is ground-up new construction for investors who are going to buy a piece of land and build a house on there. And again, this is all investments only, no primary homes. And the second product which I spoke about, which is the 30-year mortgages, we offer a program called DSCR, which is pretty common in our world now, debt service coverage ratio. It's geared for anybody who wants to be a landlord. You either want to buy a turnkey property or you own properties with tenants and you're just going to pull some cash out. So this is the DSCR program that we offer on long-term leases, which is at least 12 months. We also do the same for properties which are short-term rentals. So if you have an Airbnb or a Vrbo and you're looking to get a DSCR mortgage, we do lend on those. And the last product we have is a portfolio loan, which is basically geared for investors who have a bundle of properties either to fix up, or they have a bunch of properties they own as landlords and they want to just roll it up into one single blanket mortgage.
Nice. Yeah, I mean, as you mentioned before, I think you have investors get this idea if they're working with a hard money lender, like a private money lender, a wealthy person in their area, you might get faster commitments and a little bit more straightforward process where you usually will. However, the fees and the rates are usually higher. And then when, say, we're working with a local bank or something like this, it's usually a little bit more straightforward in the sense that there's usually only like 3 people on that loan committee. They're locally based. It's a little easier to get loans pushed through. And there's more of like what you said, common sense underwriting. Can you explain a little bit about how the loan process with InstaLend really differs from a traditional lender? And kind of like what your competitive differentiators are?
Sure. So firstly, we are an asset-based lender. What I mean by that is we focus our underwriting on the subject property, whether it's an acquisition or a refi. We are not looking to qualify your personal income. So unlike banks or other conventional sources of capital, this is not DTI. So we are not asking for investors' tax returns or pay stubs or W-2s. All we're looking to do is get an appraisal for the property, and based on the value in the appraisal, we make the loan. Now, of course, the loan LTV is also tied to credit and experience. So we're looking at a 680 minimum credit, but we only do soft credit checks. We don't do a hard pull, so it doesn't affect your credit. It doesn't, ding your score. That's something we want to make sure, is more from a common sense perspective, because you may be doing your 1 property today, or you may be doing your 100 property. We can't be doing a hard check on you every single time you're looking to get financing from us. In terms of experience, we again want to make sure that experience qualification is not too rigid. So as long as you understand how real estate as an asset class works, we have qualifiers for experience. Just as an example, say you've never invested, you've always been on the fence, but you've been a GC and you've always done rehab for other investors. So having a GC license will also count as experience. Similarly, if you are a licensed realtor, you may have never invested yourself, but you understand how real estate as an asset class works. We will give you credit for that experience. So these are the credit and experience qualifiers. Outside of that, we really take pride in like I said, trying to close quick, but with a reasonable term sheet. So we get you a proof of funds to start with. If you need to get a property under contract, that's typically where investors first, start building a relationship with us. The proof of funds is issued the same day. It's typically within a couple hours. And then once you have a property under contract and you get us a scope of work, we can close a loan within 7 to 10 days. So we get you a term sheet the same day. And based on the appraisal, which typically takes 3 to 5 days, we'll go ahead and get underwriting completed in that timeline when appraisals are getting done, and close probably by the 10th day. Now, of course, this ability to close quickly also depends on the investor's ability to get us what we need as quickly as possible. So it's about working. The dance is on the 2 legs, but we do close pretty quick. And our loans are structured as business purpose. So they go to your business entity like an LLC or a corp. So it doesn't affect your personal credit. It doesn't affect your utilization. It allows you to do multiple loans at the same time with us. We don't have caps where, hey, you've done 5 loans, you need to pay us back to borrow more. We do take pride and we do merit underwriting specific to assets only. So all loans are asset based, and it allows you the ability to scale quickly and close in a short period of time. Outside of this, in terms of rates and points, which is where most lenders compete, we typically for fix and flips are in the range of 9 to 10.5% interest only monthly payments and no prepay penalties. We do charge up to 2 points depending on how far along we are in the relationship. The more business we do together, the better the terms get. Or if you have a competing term sheet, we do have the flexibility to match or beat. And in terms of how we also compete is it depends how investors are sourcing properties. In today's time and age, I don't know how many investors are getting properties through MLS, or are you working with realtors, and or are you working off-market deals? Or what we've seen commonly is a lot of wholesalers, flipping contracts to investors. So if we have investors who have properties through wholesalers, we will cover the wholesale fee as part of a loan amount. So you don't have to come out of pocket. If you're a BRRRR investor, where you're buying, rehabbing, renting, and then refinancing, and all you're looking to do is fix up a property and then bring in a tenant, we'll do a full DSCR 75 LTV cash out as early as the 90th day. So we only have a 3-month seasoning for max LTV. So I feel these are terms and guidelines which are pretty competitive in the landscape, which allows us to work and give the best terms to our clients.
So I was speaking to this new investor, probably like a year ago or something, and they were talking to me about they got proof of their first fix and flip loan, and they weren't aware of how the kind of rehab funding draws worked, which is kind of amazing and surprising that never came up during the process. But for investors that are looking at doing a heavier rehab or a fix and flip, can you talk a little bit about how funding draws work with you and how it might differ from other lenders out there? And I know when I speak to private lenders, this is like something that they really focus on getting out to their investors as soon as possible.
Absolutely. Yeah, that's a big part of the relationship building with us and the clients. So typically for rehab funds, these funds are held in a rehab escrow at closing, and they're released as reimbursements towards the work completed. Now, keep in mind, we don't mandate a particular rehab schedule or the number of draws. We allow investors to have that flexibility on, hey, as and when you finish work, as and when you need the funds, you can request a draw. Where we've used technology to help us gain an advantage or an edge is, we used to do third-party inspection reports pre-COVID, and now we've migrated to a self-inspection model where we basically send you a link which you open up on your mobile phone at the property. So it is geotagged. You take those pictures for the items that are completed and you hit submit. So it comes to us through a portal, and we have the ability to send you the draw funds the same day. So we've cut down the turnaround time on releasing a draw, which was about 5 days through a third-party inspector, to now the same day with a self-inspection.
Yeah, that's really powerful, because even usually it takes multiple days with other lenders to get that draw out. And I know a lot of private lenders, they like to meet the investor at the property, which is great for that relationship and to write them that check. But obviously, everybody's busy. It's difficult to get that all sorted out. So that's a great way of moving it forward. One thing we were talking about kind of speeding up the process is, I always see it with appraisals, and it's something that's it's a third party. Obviously, the investor doesn't have any connection or shouldn't have any connection with the appraiser. But how do you guys do that to streamline the process through to really keep it? Because 7 to 10 days is a pretty tight timeline for closing on the loan.
So we do have local appraisers empaneled. We work with AMCs, so we have a panel. These are appraisers we worked with over the course of the last 6 years. We built a relationship. We also have a good amount of data across these markets, given the number of loans we've done. So we also have the ability from our internal science team to look at appraisals, to look at comps, to have a good sense on where the market is, where the values are, and what the trends are. So that allows us to, again, work competitively and get this turnaround in 3 to 5 days.
Interesting. Okay.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
How can an investor really best prepare themselves for a fast or faster pre-approval and closing? You said your pre-approvals are only within a few hours, but to speed up and to keep everything, because obviously it's something where you're waiting on documentation, the whole thing stops until that happens, or whatever that item is that you're waiting on. What would you say are some of the things that best prepare investors beforehand, before they go and actually speak to you about a pre-approval, or they get something under contract, or they're ready to get something under contract, how to get all their ducks in a row. And, what would you say some of the normal factors are in that process that really slow it down?
Sure. So for new investors, I think it's important to get an LLC set up. Like I said, these loans are structured as business purpose. So while you can still, get us get a property under contract in your personal name, we'll pre-approve you an individual name, but eventually the loan has to close in your business entity. So getting that head start on setting up an LLC, which is pretty easy in today's time. You can go online and you can set it up in a few hours. I would say that's the first step. Outside of that, try and make sure you have a licensed GC who is doing your rehab, because it's your first deal. So you want to make sure your scope of budget is drawn up correctly, both from a costing perspective and from making sure that you can wrap it up within the loan tenure. So it's not going overboard from a timing perspective. You want to go and walk the property. That's a great idea to know what the current status of the property is, the description on the budget, what are those line items, where is work being done, just so that you're not completely out of sync on having this delegated completely to a third-party GC and not really knowing on the ground level where these upgrades are happening. And I would say if your exit strategy, again, it could either be a flip or it could be bringing in a tenant. If you're going to flip it, then start building relationships, have a good realtor on board, because eventually you will want to list the property and you will want to have a good team working with you. If you're looking to do a DSCR and that's your strategy to not do one but do multiple of these, eventually you will need a property management company to come in and manage your properties. So start looking for good property management companies, build a relationship. All these things, if you take a head start today, then by the time you finish your rehab, which typically is 6 to 8 months, you'll land up with maybe 2 or 3 such relationships that you will then want to narrow down on. So when you finish your rehab and you're ready for an exit, you're in a good place to, finalize what these relationships are and what your exit is. Outside of that, I would just say, just keep your docs together. I mean, be organized. If you've done multiple deals, keep your HUDs on your deals that you closed. Keep your credit, at least at 680. You can continue to monitor it through various apps to make sure that, hey, this is not going below the minimum. But that's all I can think of in terms of, what are some best practices for someone to, work quickly with us.
And keep all your docs in order and, credit, and then also building out the team, which is a major thing no matter what type of kind of investment strategy you're taking within real estate, as I find, because there's so many people that are involved in the process, from looking at properties, buying, managing, and also selling. So what would you say is, because when you're doing fix and flip loans, and if I speak to maybe private lenders, everybody has a different take on how they do it. But if someone has a fix and flip loan out with you, I would say they probably do like a 12-month term or something like this. What happens if they can't sell it? Like, what is usually your process? Every deal is different, but what would you say your process is typically, how you work that out to give them a little bit of extra time, or to make it so it's still a win-win for everybody, even if it takes a few more months?
Absolutely. So one thing we do actively is we monitor your draw progress on your rehab to make sure that, hey, you're coming along fine on your rehab to meet your 12-month term. And sometimes that may not happen for multiple reasons. Say you need to pull permits and that gets delayed, so you can't start work, and hey, now you're looking at more than 12 months to get the property work completed. So we do offer extensions, 2 extensions of 3 months each, depending on how far along the investor is and how much time they need to finish. So this gives you the flexibility to wrap up your work should there be any spills, whether it's a cost overrun, time overrun, permits, you changing your GC, life just happened, and you need some more time. So yeah.
Do you find a lot of your investors that are doing a BRRRR strategy where they're buying, they're rehabbing, all this type of stuff, and then they're renting it and then refinancing? Are they keeping that refinance usually in-house with your firm? Is that usually how the plan is?
I mean, that's what we've seen. We have a pretty sticky process. Like I said, we try to keep it more of a common sense underwrite approach, so investors like working with us. And since we already have a lot of the information on, our investor, which is credit, experience, appraisals done for the property, is just an easier lift to get the final DSCR done, because you don't have to work with a different lender and then churn through the same underwriting process again by producing the same docs. So it's peace of mind for our investors. Our rates are pretty competitive on DSCR. We start at 6% in today's time. Like I said, we only have a 3-month seasoning. We do allow for vacation rentals on DSCR. So we are offering a pretty competitive product, and we are also offering, the nuances, the nitty-gritties that come along with it for the derivative assets like vacation rentals, which not a lot of lenders focus on. So we often find ourselves as, coming out of the front with our investors because, they want to work with a lender, which is a full service shop, but at the same time, it's pretty competitive. And servicing the relationship is our real focus. So we've been able to win these deals and keep them in-house.
The seasoning, having a short seasoning is something that I think most investors, maybe especially new ones, are not like checking off that box, because if you're paying 10, 12%, whatever the rate is to you, you got to keep that, 3 months, 6 months, 9 months, whatever it is. Now you're just paying, well, you have a tenant in there, you're just overpaying for this debt, where you could just refinance it much faster if it's only 3 months seasoning. I mean, it's a pretty straightforward process where you're just making sure the person they put in there actually is paying the rent. You know what I mean?
Exactly. Yeah.
So, you are a real estate investor. That's why you started this company with your brother. What would you say, and then also working with a number of different investors, what we're seeing is some common mistakes you see real estate investors making? This can be any part of the real estate process, but I imagine you have a number of them around financing.
Sure. So one thing we have, rather we would like to point out is where we often see investors make some mistakes is on that scope of work. Sometimes, and it's very simple, right? If you're doing a BRRRR strategy and your scope of work is, it kind of mirrors what a property which is built to sell looks like, you don't need to spend that much money because you're not selling it to get all that equity out, right? It's not a home you're building to sell to a primary homeowner. You're just rehabbing a home to keep it rent ready. So the rehab budget for a rent ready home is very different, and it should be light compared to the rehab budget that you have for a property to sell. So often new investors, first-time investors, they're pretty excited about getting the upgrades done to make the house look as good as possible. And I think that's an aspect where you save money and also you preserve your equity, right? Because the less cost basis, and you're anyway getting a cash out at 75 LTV, the more on the equity that you can pull out. So I would say that's something you should keep your eye on to really understand what is your exit strategy, right? When you're getting into the project, to know how do your numbers tie in and where do you really need to compensate versus where you need to, keep more of a high level approach. That's the number one thing that comes to my mind.
No, that's a lot of great information. I think estimates and everything like that when you're pricing out for your underwriting is something that even experienced investors get caught up on. It's not just something for new investors, but it's definitely something that you have to really pad that reserve budget if it's your first time out, or if there's a lot of unknowns depending on how much inspection you really did of the property before actually buying it.
Yep.
Well, thank you so much for coming on today. How can our listeners learn more about you and InstaLend?
So all our information, including a portfolio of the loans that we have funded, is available on our website, which is instalend.com. You can request a pre-approval through our portal. You can request a loan submission, an application through the portal. Everything resides there. You can also reach out to me through the portal.
One last thing I want to just make a note of here is, what states are you nationwide? How does that work with InstaLend?
We are nationwide with the exception of the Dakotas.
All right. Well, thank you so much for coming on. We'll put the link into the show notes, and looking forward to connecting with you here in the near future.
Thank you so much. I had a great time.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.